Hey, good morning, everybody. It's Brian here today for just a really quick update. It's the 3rd of August, so brand new trading week, brand new trading month. So here to get after it, get started, see what the day brings us. I'm going to keep this really short today. I've actually got something I've got to do prior to the market open. So I'm going to try to get through kind of planning what my day looks like here and what opportunities I might have, and then get out, get back, and get to it. So anyway, with that said, we're going to keep today's session pretty darn quick, and I stay focused. No sidebar things, no rabbit holes. I'm going to go down hopefully with commentary. So big things coming up this week. As we look into the week, we've got today is a bank holiday on the CAD. So for those of you trading forex, definitely you're going to want to keep the CAD pair, any CAD crosses out of it, because obviously they're on a bank holiday, so volume is going to be significantly lower than it typically is, because you've got market makers out, banks out, so on and so forth. For the U.S., we've got a couple of news reports this week. Today is manufacturing PMI, but the big stuff that's coming up this week really is on Wednesday and Friday. Wednesday, we've got the ADP non-farm employment change. This is the precursor to non-farm payroll. So this could be a fairly impactful report, followed by another non-manufacturing index, as well as crude oil inventories. So Wednesday morning, a lot of news coming up that could be market impactful. Then Friday, because the first Friday of the month, is non-farm payroll, which again, very highly watched news reports. You've got non-farm payroll and the unemployment rate. So this report coming out on Friday could also be very market impactful. As it stands, on Friday, our last trading day, Friday the 31st of July, crazy day, opened to a major sell-off, and then the last hour of the day just rallied like mad. So definitely some interesting things going on in the market right now, which we continue to talk about, continue to kind of stay on top of right now. And as with every day, we talk about the fact that we want to trade with the trend. So we look for bias in the marketplace, and we try to find out what that bias is, and then trade with that bias. Of course, I have been saying counter trend trades are fine, but have an exit plan for them if it doesn't work out for you, because trading, so if you're trading with the trend, it's kind of like you've got a moving train kind of rolling along, and you can jump onto that train and ride it, and get off when you choose to. When you're counter trend trading, you're trying to step in front of the train, hope it stops, and then get on for the ride the other direction, right? More often than not, when the train's moving, it's not going to stop as quickly as we might hope it would. So when we're counter trend trading, we want to make sure we've got an exit plan, and if the train is coming to us, it's going to hit us and run us over, we need to be able to get out, right? So keep that in mind. Today, as we look over at the let me start with forex. So for forex, we're not going to have any CAD pairs today. So when we're looking at forex, we want to look at the currencies that are moving and take the CAD out of the mix. So you might consider, we've got the USD has been pushing to strength here. Yen has been fairly flat, but then just recently, over the last few hours, has been pushing down to weakness. So we've got some divergence in the US yen. That's not normally a very good pair to trade, because it's typically, they typically move together. Although it did have a big day on Friday, a really big day on Friday, and today it's already moved 85 pips. So it's not a great currency pairing to look at right now, unless we're looking at a reversal of what it's currently been doing, which I'd rather not do. So we're going to have to kind of look in the middle here and see if there's anything else that we could potentially put together. Euro versus the USD. Again, that one's not stacking up very well. We look at the Euro USD. That one's moved 83 pips, averages 85 to 90. So is the opportunity there to get us that quick 20 pip punch that we're looking for? I I don't really see it. So just kind of looking across, most of these currency pairings that we are looking at over here have already moved their typical range. The ones that haven't, the euro versus the pound, that's moved 31 pips. Its averages into the 60 really 60 range, 60 pip range. But they're trading kind of with one another right now. We're not really seeing any divergence. Could that return to its mean? Kind of return to its average? Yeah, potentially. That could potentially be an opportunity. But we look here right now, and it's not really an opportunity for us because it's trading directly with one another. So, long and short of it is coming into the day right now, looking at the forex market, really not seeing opportunities that are jumping out at me. A lot of the currency pairings have already moved at or to their typical range. Those that haven't, have the CAD involved, which CAD's on holiday today, so we want to leave it out. So it looks like today is one of those days, sit on your hands for forex and don't do anything. Unless your plan dictates it, and you might have some other things that are involved in your plan, but definitely wait and see if you've got a currency or currencies that are diverging from one another that actually have some opportunity for movement, and then apply that with your trading plan to see what you can pull out of it. But for me, trading the breakout strategy first thing in the morning, utilizing currencies that are diverging, watching for that that good split between the two, one moving higher, one moving lower. I don't see anything that jumps out as a tradable opportunity on the market open, so I'm going to pass on that. All right, moving over to the futures market over here. Well, got a lot going on. As you mentioned, into the day Friday, one heck of a rally right here into the day on Friday. As we came into the market Friday, we had kind of the same situation we're in right now, where 4-hour bias is long and 30-minute bias is long right now. So this tells us we'd be looking for long trading opportunities. On Friday when we came in, it just sold off immediately. You would have had an opportunity down here, looking at that 32.30, 32.18 area right here, which it moved down to and then reversed off of, and it's currently moving up. Next stop, if we break above 32.80 here, is 3300. There's really nothing in between there. Once you break out of this previous high over here, it's 3300 looks pretty darn enticing. So with that said, 4-hour bias is long, 30-minute bias is long, so we'd be looking for long trading opportunities to see if we can't move up there. So what does that look like? Well, buying off of 32.80 certainly is one way to go, looking at 32.80 with a target of 3,300. The other would be to see if it floats back down here to this 32.70, which is, we look at just kind of short term over here on the 30-minute, but it was a top on Thursday night. It was a top on Friday over here, and it's been tested again in the off session as things got rolling. Electronic trading on Sunday, yesterday, it's been tested again, and it finally broke through it. So floating back down to 32.70 isn't out of the realm of question, but so we could look at either here or here for a buy to see if we can't push on to 3,300. Now, the other way to go is to wait and see. If we got this crazy volatility like this, it may be just a good day to step back and let it do its thing, as we've talked about before as well. But the other way to go is looking for pullbacks, and until you get across, looking for pullbacks and see if we don't get an opportunity where we can go long off of a close of a candle that's got a lower high and lower low on this uptrend. But we would be looking for long trading opportunities here on the S&P. Now, I know a lot of you are going, oh my God, how can it possibly go any higher? It's ridiculous. All these things are going on, blah, 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 blah. It'll move until it's exhausted. Forget the reasons why and everything else. Just the whys don't matter. We all know at some point it will reverse. We all know that at some point it's gonna move back down. When is what we don't know. We don't know when. So that comes back to what I said earlier. It's fine if you want to take a counter trend trade. Just have a point and a reason for doing it, and then have an exit plan if it doesn't go your way, right? Don't just hang on indefinitely to something that's moving against you, because that's a definite way, quick road to ruin right there. Best thing to do, keep trading with the trend until the trend changes. And trading with the trend, you're going to take losses as well. I just want to reiterate that. Just because you're trading with the trend doesn't mean that you're going to win every trade. Trends stop, trends pause, trends reverse. But you've got longer term, you've got a much better opportunity if you're trading with the direction of the market. So anyway, right now we want to look for long opportunities in the S&P. If you're looking to short it though, if you're saying, hey, I think this thing's going to turn around, put a short in at 32.99. Just put it up there. It's a big whole number. The chances of it hitting 3,300 and just blowing through that by another 40 points is it could happen, right? But it's not hugely likely. When you get to a big whole number like that, there's usually some struggle around it. So even if you're looking at that 32.99, 3,300 as a potential short opportunity, put your stop a little ways beyond it. But more than likely, you'd be able to pick up at least a little bit of something as it hits that level, and it triggers some selling. It's going to trigger electronically. It's going to trigger a big whole number like that's going to trigger something when it hits there. So, you can certainly look at that as a reversal point. But I would say your best opportunity for that nice, smooth, consistent process is trade with the trend. Watch for that long trading opportunity, which is the direction of the current bias. The 4-hour bias is long, 30-minute bias is long. We want to look for long opportunities. So, with that said, what we're looking for, and is the first little bit of the day, we're watching for that process where we get a pullback that we can then take advantage of to make our entry on the previous close of a lower high, lower low candle. We'll place our entry and then take it from there if we have that. And that's what we've been trading here with that small account challenge, which we haven't had a trade in a while. That's stacked up for us. We haven't had a trade. Well, I was out week before last, and last week we've seen what's happened in the market here. It's been really crazy and choppy. There's going to be times you don't trade. I know that gets frustrating for some traders, but you're better off sometimes just simply not trading. If your plan doesn't tell you to trade, you don't trade, right? That's huge. If your plan doesn't tell you to take a trade, you don't take a trade. No matter how bad you want to take a trade, don't take a trade. So so we've got that working for us for that small account trading process, which works with everything, by the way. It works with any account. But maybe we'll get something today that we can take advantage of. We'll see. Over here in crude, what's going on in crude? Crude, we've flipped over. We've had a heck of a run up from 6, and now we've kind of stalled out a bit. The 4-hour bias has changed over. The 4-hour bias is short. So 4-hour bias is short, and our 30-minute is currently short as well. So we'd be looking for short trading opportunities. So what's that look like for us? Well, 40-20, great spot to look for. And we can see how it's been support. Now it's broken below it, resistance here. So this would be a great spot to look for potential short trading opportunities, is off of this 40-20. If you're looking for a breakout, wait for it to break, down here. You can either wait for it to break 39.60, or you can just wait for a break of 39.80, which is this level here, which is again support. It's been supported here as well. So if we can break 39.80, that would be a potential area to look for a short trading opportunity. The flip side is to do what we've talked about doing before, which is wait for, in this case, higher highs and higher lows, and then trail your entry point at the bottom of those and wait for it to break below that previously closed lower high, so that you can then take that short entry from there. But we would be looking, if we look at the bias here is short on the 4-hour and it's short on the 30-minute. So we'd look for potential short opportunities if we're trading with that trend. Right? All right, gold. Gold's been on a rip, man. Gold has just been tearing higher and higher and higher. Cracked 2,000 now a couple of times. Hasn't been able to close above it, but it's pushed above it and then reversed. So gold, 4-hour bias is long, 30-minute bias is long as well. So we'd be looking for long trading opportunities. What do those look like? Well, you can look for a breakout. If you're looking for a breakout trade, 1995 right here. big level. We break above 1995. That'd be a great spot to look for a breakout. Others would be pullbacks back down to 1980, or you can use the method that we've been talking about quite a bit, which is just waiting. Look for your bias, find out what your directional bias is, and then as price makes lower highs and lower lows, simply trail your entry point at the top of that previously closed lower high. So that's what we've got. I'm going to leave it here so I can get out and get done what I need to do, and then still get back to see what the market does for the day. All right, so that's it for me for right now. You guys have a great day, and we'll talk to you soon.